This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus is wary of a renewed rise in U.S. oil output when Donald Trump returns to the White House. Delegates from the group said, because more U.S. oil would further erode OPEC Plus market share and hamper the producer group's efforts to support prices. OPEC Plus pumps about half of the world's oil and earlier this month delayed a plan to raise output until April. The group extended some of its supply cuts until the end of 2026 due to weak demand and booming production from the U.S. and some other non-OPEC Plus producers. OPEC has a history of underestimating U.S. output gains going back to the start of the shale oil boom, which has seen the United States become the world's top oil producer. The United States now pumps a fifth of world supply.
China's gasoline exports rebounded in November to the highest level since August 2023, customs data showed on Wednesday, as exporters rushed to sell products before a cut in tax rebates came into effect this month. November gasoline exports rose 42.1% on the year to 1.26 million metric tons, 10.65 million barrels, according to data from the General Administration of Customs, bouncing off a six-month low in October of 670,000 tons. The government said in mid-November it would reduce the export tax rebate rate for a range of goods, including some refined oil products, from 13% to 9% from December.
Moving on to the top news in the energy sector.
Italy's power producers are set to generate more electricity from clean power sources than from fossil fuels this year for the first time, marking a major energy transition milestone for Europe's fourth-largest economy. However, the country remains beset by the highest wholesale power prices among major regional economies, and will end 2024 as Europe's largest net electricity importer for the 10th straight year. Italy's utilities also remain overwhelmingly reliant on natural gas, which produces more than twice as much electricity as any other power source in the country.
An oil spill from damaged tankers has contaminated a long stretch of sandy beaches along the Russian Black Sea shoreline, polluting the air and threatening wildlife in one of the worst ecological disasters to hit the region in years. Around 4,000 volunteers have been cleaning beaches near the resort city of Anapa from the spill from two tankers, which were damaged by a storm on Sunday, a local task force said. The Emergencies Ministry said the cleanup operation stretched along 49 kilometers, 30 miles, of shoreline. Numerous videos posted on social media showed birds floundering in oil, flapping their wings and struggling to fly. Black oil spots were also visible along the beaches. Next, we have the top news in metal markets. Global coal consumption is expected to hit a record high this year and stay near that level until 2027 as strong demand in Asia outpaces declines in the US and Europe, the International Energy Agency said on Wednesday. Global coal demand is forecast to be 8.77 billion tons in 2024, with Chinese demand expected to be nearly a third higher than the rest of the world, the agency said in a report. The expected jump in demand would come at a time when the carbon-heavy resource has fallen to 35% of the global power mix, its lowest level, as strong growth in renewable power supply helps countries meet growing demand for energy, it said.
Iron ore futures prices slipped on Wednesday, as supply concerns eased and demand slowed marginally due to maintenance of more furnaces by steelmakers in top consumer China. The most traded May iron ore contract on China's Dalian Commodity Exchange, DCE, ended daytime trade 2.63% lower at 778 yuan and 50 fen, $106.86, a metric ton, the lowest level since November 27. The benchmark January iron ore on the Singapore Exchange lost 1.57% to $102.90 a ton by 0736 GMT after hitting the lowest since December 9 at $102.60 a ton.
We will now look at the top news in the agricultural sector.
Global edible oil markets slid on Wednesday, as expectations for a record soybean crop in Brazil early next year and the new U.S. plan to allow gasoline sales with higher ethanol blending raised worries over vegetable oil demand, triggering a sell-off. The prospect that Indonesia's expanded biodiesel mandate may be implemented gradually added pressure on edible oil markets. Soybean oil prices traded in China dropped to a 3-month low, while Malaysian palm oil futures lost more than 4% and US bean oil slid 2.4%.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.